Welcome to our second episode of Time with Terra, our web series dedicated to keeping you in the know. Buying property is one of the largest investments that an individual would make in their lifetime, and it involves many stakeholders. So today, our topic is about the process of buying property in Grenada. My name is Renee. I am the brokerage manager of Terra Caribbean, and today I am joined by two of Grenada's banking industry experts. They will assist me with providing you with vital information on the topic. To my right, I have Mr. Musa Jassat, the country manager of RBTT Bank Grenada Limited. And to my left, I have Mrs. Florence Williams, the executive manager for loans and credit administration of the Ariza Credit Union. Now here at Terra, we always advise our clients to speak to their financial institution before beginning their property search. The clients need to know the amount that they qualify for, as well as all of the expenses involved in buying property. Now, Mrs. Williams, we advise our buyers to expect at least 2% legal fees plus VAT, as well as valuation and surveying costs. Can you elaborate on some of the other expenses that purchasers should be aware of?
We advise borrowers, persons who are investing in a home mortgage in particular, to be aware of three types of costs. The preliminary cost, as you mentioned, includes one, obtaining a survey of the property, and that is very critical to ensure that the property you're purchasing is actually what you're paying for. And therefore we advise that a survey be done independently. There is also the preliminary cost of the valuation of the property to determine that you are paying a fair price for the property. And of course, the bank wants to secure the financial institution equity in the property. And of course, there are the closing costs. And as you mentioned, closing cost includes the lawyer fees.
Yes.
According to the banking, to the Bar Association, I think that cost is around 2%.
Yes, that's right.
And of course, we cannot escape the government stamp duty.
That's right.
Which is 1% of the purchase price. And of course, the bank has fees and charges, which are also part of the closing fees and closing cost. And what is worthy of taking note of is those fixed costs that would be with you for the life of the loan. You cannot escape those fixed costs, and those fixed costs includes the insurance, life insurance. The credit union in particular, for every loan that a borrower has, it must be insured, life insured. There must be life protection.
Right. So the borrower has to have life insurance, and that's on their life. Yeah.
Yes, and it's for the life of the loan, and also you are required to insure the property. If there is a home or building on the property, there must be insurance to the value of the property.
So that insurance, of course, has to kick in before the transaction actually closes.
That's right.
Right.
That's right. You must have coverage. You must have proof that the coverage exists or can be granted to you.
Great.
As the purchaser, as the owner, or prospective owner.
Great. Well, thank you. Thank you for that. That's some interesting things to keep note of there. Now, Mr. Jassat, when speaking about getting a mortgage, we always hear the term debt to service ratio. Can you explain what that means?
So debt to service ratio, in very simple terms, it means the percentage of your income that goes towards servicing the loan, your loan payment. All right, so debt to service. So essentially, the higher the debt to service ratio is, the greater the percentage of your income that's going towards servicing the loan, which is not a desirable situation. So most of the financial institutions, if not all, has a certain percentage which we work with in order to advise and guide our clients in ensuring that they are not overly leveraged to the banks. Because outside of paying your mortgage, there are other living expenses that you have to ensure that you can cover. So that's the rationale behind the debt to service ratio.
Okay, and what is the average or the range that is acceptable in Grenada?
It's between 30 to 40% among the institutions. You'll find a couple of institutions going above that based on their risk appetite.
Okay.
Now, I must say that it's not necessarily absolute because depending on the income level of the borrower, we can work with a higher debt service ratio.
Right.
The rationale here simply being that the person has a very high income, It therefore means that there's substantial disposable income in excess of paying the loan that the client can use to defray his personal expenses.
Now, another thing that comes up often, right, with us, speaking to prospective purchasers, is deposits, right? I know from my 10 years of experience that most sellers require that the purchaser pay a 10% down payment in order to secure the property. But I also know that most banks or most credit unions would require a deposit in order to secure the mortgage. So we're looking at sort of two sets of deposits here. Ms. Williams, can you tell me approximately how much that deposit would be to secure the mortgage?
With the credit union, it is a slightly unique situation.
Right.
Every borrowing member must retain with the credit union at least 10% of any borrowing that he or she may incur with the credit union. So that is pretty standard, very standard. 10% minimum must be held in deposit.
If a prospective homeowner came to me and the property that they wanted to buy, that seller said, hey, I need a 10% down payment and you need to pay that when you're signing your sale agreement. Essentially, that homeowner or that prospective homeowner will need to have 20%. They will need to have 10% to give to the bank or the credit union to pay down on the mortgage, and they will need to have 10% to pay down when signing the sale agreement.
Right.
Essentially, I mean, it doesn't happen in all instances,
right.
But in an instance where you have a seller who requires a 10% down payment, then that prospective purchaser will need to have 20%.
Yep.
With 100% financing, we do take into consideration the depositor's contribution.
Okay.
And what we have done is to insist that approval must first be granted before the purchaser make that 10% deposit. Right. In other words, we realize that there are certain clauses that may cause the purchaser to lose his or her deposit based on the terms of the sale agreement. So unless there is an exit clause that says in the event the purchaser would not or does not qualify for financing or denied financing, then he or she will be refunded.
Renee, I just want to add that, as you mentioned in the beginning, that a mortgage is one of the largest investments that one would make in a lifetime. So from that perspective, one has to have an input. Have an input in it's an investment you're making, so you have to have some level of input in the investment because it's a long-term investment. At the banking level, we seek to finance approximately 80% of the purchase price of the property. Okay. So the client will have an input of 20%, which would include essentially the 10% down payment and an additional 10%.
Right. Now, is there any other advice that either of you would like to offer to prospective purchasers about the process of buying in Grenada?
Yes. What I would like to say is that, the term of the loan. And that's something that, we tend to overlook because, we're looking for an affordable payment. And in so doing, it's sometimes tempting to stretch the loan over a long time, way beyond retirement.
Yes.
And that is something that we do not really encourage because of the fact that, beyond retirement, you don't want to have to leverage on pension income to service a mortgage. All right? People who are self-employed and would have income earning after retirement age, almost 60. We do have exceptions for those self-employed and so on. But it's just in general terms, the advice that we would like to give to prospective buyers.
Great. I appreciate that. Yeah, Ms. Williams, anything that you would like to add?
We encourage persons as early as possible to seek financial counseling and to ensure that knowing that a mortgage is probably the biggest investment that one would have had, that you from the very beginning get financial advice before entering into such an arrangement.
Now, I'd like to take this opportunity to thank both of you for joining us today. You guys have given some very insightful information that I know all prospective buyers would appreciate. And so I thank you for joining and for being a part of Time with Terra. After the buyer has been qualified for a certain amount, Here are the steps that they should follow. An agent from Terra Caribbean will be assigned to the buyer to help them find the perfect property. Once the buyer has found the property, they should make an offer. Once the offer is accepted, we will prepare an acceptance of offer letter. This letter is sent to both the purchaser's lawyer and the seller's lawyer. The lawyers will then prepare the sale agreement. The sale agreement must be signed by both parties, the buyer and the seller. In most instances, the purchaser will be required to pay a 10% down payment on signing of this sale agreement. After this process is complete, all parties will have approximately 90 days within which to complete the process. After this 90 days, in order for the transaction to close, the funds will be exchanged for the executed conveyance. We hope that this episode of Time with Terra has been informative. Now remember, Terra Caribbean is here to guide you step by step through the buying process. We know Grenada, we know real estate.